Wednesday. Welcome to everybody to today's edition of Toggle's Daily Video Insights. For those of you joining us for the first time, my name is Jan. I'm one of the co-founders of Toggle, and today we're going to take a deeper dive into one of the many insights generated daily by Toggle, trying to uncover what are the driving forces behind a particular stock, what is the potential upside versus the downside risks, and so on. So if you'd like to see these insights more regularly for a fresh stream of ideas, sign up to our YouTube channel, or otherwise check us out on toggle.global, where you can actually test drive Toggle for yourself completely free. Now, the focus today, as I mentioned, is going to be on Baker Hughes. It's a company that many of you will know who follow the energy industry more closely, and it's one of the more famous drillers out in the Permian shale and so on. The interesting thing about this particular stock is that actually we haven't really had a positive insight since a very good call earlier in April that highlighted that the stock is poised to potentially move up quite a bit based on a lot of the seasonal factors. And so this time we're actually seeing a suggestion that the recent move up could provide enough thrust for the stock to move up quite a bit higher. So we're going to click on this insight here to take a closer look at what exactly the analysis is telling us and what the machine has uncovered. Specifically in this case, what we're really looking at is that based on 10 similar occasions when you've had a similar kind of thrust, using 26.31 as the entry point, the stock could move up as high as 53.39. Now, as you can see, this is an incredibly volatile projection based on these past 10 analogs because there have been a range of outcomes. But the point is, if you don't drop below 13.15, this is potentially quite a worthwhile stock to hold if it fits in your portfolio. Now, why it might move, again, looking at this, you can see that we have had only a handful of occasions when the thrust, as it has been so far, is as strong as now, and that typically these periods have been followed by very strong performance. Now, looking at this from a different point of view, you can see that if you had invested $1 in each of these past 10 episodes and then reinvested it, you would have ended up with almost $3 of profit. And the distribution of past returns also shows you a very compelling skew, where the downside returns have been concentrated around 2% over the following months, but the upside occasionally was substantially higher than 10%. So again, you have this 6 to 10 clustering here that suggests that this could be a 3-to-1 kind of risk reward. Going back to the overview, again, the focus here is on potentially a rise that could be really quite extraordinary. And so we invite you to take a look at this company, see if you agree with the fundamentals, if there are any other technical analysis patterns that you need to examine, and see for yourself. So much for Baker Hughes. In the Daily Brief today, we also discuss the other company from Mr. Elon Musk, which is SpaceX, and the industry that it's intending to disrupt next. So for those of you who subscribe, the email should already be in your mailboxes, and for those of you who don't, you can easily subscribe on our website at toggle.global. Thank you for your attention, and we'll see you again on Thursday. Looking forward to it.